Hey everyone, and welcome back to The Explainer. Today we're unpacking a truly fascinating and, let's be honest, highly volatile shift in the market, the massive May 2026 surge in US drone stocks. Look, if you're a focused learner trying to cut through all the noise and just get straight to the underlying data, you are in exactly the right place. We're going to examine the fundamental catalysts driving these explosive moves, and we'll evaluate the actual companies competing for those massive defense dollars. Let's get right to it.
Okay, picture this. It's May 29th, 2026, and something absolutely extraordinary happens on Wall Street. The drone sector didn't just see a typical little uptick, it completely decoupled from the broader market. We're talking about one company surging an incredible 57% in a single trading session. Another hit an all-time high, while a third jumped 33% by lunchtime. So what was the catalyst? Well, a major headline out of Washington reported that the Trump administration was in talks to provide Pentagon equity stakes and direct loans to domestic drone manufacturers. For an industry that literally burns through massive upfront capital for research and development, the mere prospect of direct federal financial intervention? Yeah, that sent absolute shockwaves through the market.
All right, let's dive into this. Here's our roadmap for today. First, we'll cover the 2026 drone boom. Then, we'll break down the established heavyweight, the high-growth challenger, some small caps and momentum plays, and the backlog builder. Finally, we'll wrap the whole thing up with risk versus reward.
Starting off as Section 1, the 2026 drone boom and how it's changing modern warfare.
To really grasp why these drone stocks are going parabolic in 2026, we have to look back at the conflict in Ukraine. It fundamentally rewrote the rulebook on modern combat. For the very first time, we saw cheap, commercially available drones, stuff that cost just a few $100, routinely destroying million-dollar armored tanks. It was wild. The US military watched this asymmetric warfare unfold and basically triggered a top-to-bottom overhaul of how the Pentagon procures unmanned systems. And that brings us to a staggering number, 300,000. That's exactly how many low-cost drones the Pentagon wants to procure by the end of 2027 under their new Drone Dominance Initiative. Just think about the logistical nightmare there. Manufacturing 300,000 sophisticated systems in roughly 18 months, that requires an unprecedented scaling of domestic supply chains, from the tiny electric motors all the way to the encrypted communication chips.
And fueling that massive procurement push? An immediate $1.1 billion budget. Now, this isn't theoretical money earmarked for some project a decade from now. This is capital allocated right now, today, to jumpstart the drone dominance program. The Pentagon is putting immense financial backing right on the table to fast-track assembly lines, fund rapid prototyping, and actually get these systems out into the field.
But wait, there's a flip side to this coin. The final macro number to really cement these long-term financial stakes is $20.3 billion. That's the projected size of the global counter-drone market by the year 2030. Because, let's be real, the reality of modern warfare is that if you deploy drones, your adversary is going to deploy them right back. So we aren't just talking about building offensive drones, we're talking about the entire ecosystem required to defend against them. That means kinetic interceptors, high-powered microwave jammers, and crazy sophisticated radar nets. The financial implications for the companies that can solve both sides of this equation are just massive.
Moving on to Section 2, the established heavyweight, AeroVironment, ticker symbol AVAV.
When defense analysts start talking about drone stocks, AeroVironment is almost always the very first name out of their mouths. They're a legacy defense contractor, right? They've been building military drones since the 1970s. You actually might recognize their flagship product, the famous Switchblade. It's a loitering munition that pops out of a portable tube, flies completely silently toward its target, and then detonates on contact. But behind that proven hardware is a frankly staggering financial reality. For the 12 months ending January 2026, AeroVironment reported $1.61 billion in revenue. That is a 117% jump year over year. A huge chunk of that growth came from their strategic 2025 acquisition of a company called Blue Halo, which pushed them heavily into directed energy weapons and space tech. But, and this is absolutely crucial, there's a caveat. That Blue Halo acquisition severely compressed AeroVironment's gross margins. We're talking a drop from about 39% down to 22%. Integrating a massive new defense tech company brings some real headaches, like merging different corporate cultures and untangling redundant overhead. Because of that integration complexity, the stock actually pulled back pretty sharply from its recent 52-week high.
Next up, Section 3, the high-growth challenger, Kratos Defense and Security Solutions, ticker KTOS.
So if AeroVironment is the established legacy leader, Kratos is the aggressive challenger, fighting in a totally different weight class.
Their flagship product is the XQ-58 Valkyrie. Now, to be clear, this isn't some little quadcopter you control with an iPad. It's a full-size, jet-powered drone designed to fly right alongside manned fighter aircraft as an autonomous wingman. Imagine an F-35 pilot making split-second combat decisions alongside an uncrewed AI-driven Valkyrie carrying its own payload. It's sci-fi stuff, but it's real. To understand their financial trajectory, though, you have to understand the term program of record. It basically means a permanent, formally funded line item within the U.S. defense budget. It is literally the holy grail for a defense contractor. Well, in January 2026, the U.S. Marine Corps awarded Kratos a $231.5 million contract for the Valkyrie, making it the very first collaborative combat aircraft to achieve that formal program of record status. And this brilliantly illustrates why they're such a big deal right now. While they aren't consistently profitable just yet, they have an incredibly deep moat. In this very specific category of jet-powered autonomous wingmen, Kratos currently has 0 publicly traded pure-play competitors. None.
All right, Section 4, Small Caps and Momentum Plays, featuring RCAT and UMAC.
This is where the story shifts toward the smaller, highly volatile stocks that completely hijacked the late May news cycle. Let's start with Red Cat Holdings, ticker RCAT. They are up over 34% year-to-date as of late May 2026. Red Cat builds autonomous military drone systems, specifically the Arachnid platform and the Fang family of first-person view drones. These are super agile, night vision-capable drones designed for frontline infantry. Red Cat surged 33% on that massive May 29th news day specifically because Wall Street views them as a prime candidate for the Pentagon's drone dominance funding. But remember, as an early-stage developer, their revenue is basically still in its infancy. Going from hand-building successful prototypes to mass-producing thousands of flawless units, that is notoriously difficult, so the execution risk here is considerably higher than with the legacy giants we just talked about.
The absolute crucial point here is understanding the stark contrast within this sector. On one hand, you have an established, profitable leader like AeroVironment pulling in over $1.5 billion in real revenue. And on the flip side, you have companies like Unusual Machines, ticker UMAC. These are extreme high-volatility momentum plays with minimal current revenue. You have to know exactly which type of financial reality you're dealing with, because the underlying mechanisms driving their stock prices are entirely different.
Let's actually dig into Unusual Machines for a second, because this was undoubtedly the most talked about story of the week. UMAC surged an astonishing 57% in a single session, hitting an all-time high, and they gained over 100% across the month of May alone. So why the hype? First, their partner, Power US, recently advanced to Phase 2 of a key Pentagon program. Second, Donald Trump Jr. is an advisor and registered shareholder holding roughly 331,580 shares according to SEC filings. The critical takeaway here is that UMAC reached a peak market capitalization of roughly $219 million despite having extremely limited actual current revenue. This massive valuation surge was fundamentally driven by market momentum and political proximity, not by current earnings or widespread hardware deployment.
Moving to Section 5, the Backlog Builder, Ondas Holdings, ticker ONDS.
Now, Ondas offers a completely different angle on small-cap growth. Rather than relying on retail momentum, Ondas has been aggressively building a genuine business trajectory through strategic acquisitions. They recently bought a company called Omnisys for $196.6 million, and they have a pending merger with Mistral. Basically, they are assembling a massive platform that spans autonomous drones, AI, and defense communications. And that aggressive strategy brings us to an incredibly important number, $457 million. That's the size of Ondas Holdings' order backlog as of March 2026. In fact, they secured over $30 million in new orders in May alone. So they have real contracts and a rapidly growing backlog. However, you absolutely must factor in the risks of this kind of growth model. They carry heavy acquisition debt, they're dealing with the massive headache of integrating multiple defense tech startups, and importantly, they are not yet profitable.
Finally, Section 6, Risk versus Reward. Let's get to the bottom line.
When we pull back and look at the entire landscape, the distinct risk-reward profiles of this sector become super clear. This is kind of your screenshot moment right here. AVAV is the undeniable revenue leader, but you've got to monitor that ongoing margin compression. Kratos is the high-growth innovator with the Valkyrie jet, but they aren't consistently profitable yet. RCAT represents a compelling small cap with huge upside, but it's paired with steep early execution risk. UMAC is the highest momentum play, carrying massive volatility and minimal revenue. And finally, ONDS is the backlog builder. They hold real contracts, but they're carrying heavy debt and integration risk. Think of this matrix as your foundational cheat sheet for navigating the nuances of the 2026 drone market.
As always, remember our ethos here.
Real data, no hype, not investment advice. You should always consult a licensed financial advisor before making any investment decisions whatsoever. As the Pentagon prepares to unleash billions of dollars into this sector over the next few years, I want to leave you with one final provocative question to think about. When the dust finally settles, which will ultimately win the defense race? The hype of the headlines or the hardware on the battlefield? Thank you so much for learning with me today. See you in the next explainer.